Finally, this evening, the South African rand slipped on Monday, pressured by a stronger dollar and falling gold prices after the US and China agreed to cut mutual tariffs. Now, the deal boosted market confidence, pulling investors away from safe havens like gold, which fell 3%. Earlier today, the rand traded at 18.38 to the dollar, down 0.5% from Friday. Focus now turns to local data releases this week, with unemployment and mining figures expected to disappoint. Meanwhile, the top 40 index edged up 0.2%, while the 2030 bond yield rose to 8.89%. Market analyst Mabinini Piri reports.
So the South African rand began the week on a stable note, trading around 18.05 to about 18.22 to the US dollar. This comes despite global market volatility and a strengthening US dollar, which gained ground following the renewed commitments from both the US and China to ease off trade tensions by rolling back some of the trade tariffs. The rand's resilience highlights cautious optimism amongst investors ahead of the busy week for domestic economic data. Attention now turns to two key local data releases that could shape the rand's direction in the coming days. On Tuesday, South Africa will be releasing unemployment figures for the first quarter of the year. Analysts are expecting the jobless rate to remain stubbornly high, reflecting ongoing challenges in the labor market. Then on Thursday, March mining production data will be published, another critical indicator for the local economy. Soft performance is expected in both reports, with a growth focus of just 1% for the year, which is below market expectations. I guess at this point, all eyes will be on whether the data reinforces the views of a sluggish recovery or surprises with signs of underlying strength